This weekend, Germany is flashing two very different signals. On Friday, Germany's flash manufacturing PMI jumped to 54.1, far above the 52.0 forecast and signaling expansion. Yet Commerzbank expects the Ifo Business Climate Index to fall from 86.6 in July to 86.0 in August. Why would one major gauge be improving while another weakens? The answer is not current activity, it is expectations. The Ifo index surveys roughly 9,000 firms each month, and the August drop is expected to come from companies turning more pessimistic about the months ahead, not from an immediate collapse in orders. That gap between resilient hard data and fragile confidence is the real story today. The recent path explains why this matters. Germany's Ifo index rose from 85.7 in June to 86.6 in July as expectations briefly recovered. The escalation in the Iran war has reopened those wounds. Commerzbank cites renewed conflict fears and higher energy prices as the main drag. The Strait of Hormuz is central. When shipping through that narrow passage is disrupted, oil and gas costs jump, and industrial firms in Europe's largest economy feel the squeeze. Ralph Solveen has been blunt: as long as the war continues and the strait stays closed, demand for German industrial goods will be curbed, and order figures are likely to deteriorate again. This is a geopolitical shock working through energy prices and supply chains. The impact right now is selective but dangerous. Commerzbank says the current business situation has remained relatively stable since the Iran conflict began, meaning many firms are still producing and selling. That is why the manufacturing PMI can still look strong. The damage is showing up in forward-looking indicators, investment plans, and order books. Lower river levels on key routes like the Rhine are adding another supply chain headache. Jörg Kramer warns that companies continue to suffer from Germany's eroding attractiveness as a business location. KfW economist Sebastian Wank put it vividly: the recovery is stuck in the Strait of Hormuz. Every additional week of the war depresses sentiment further and holds the economy back. Looking ahead, the bar for a positive surprise is low. Commerzbank says anything other than a decline in business expectations for August would be a positive surprise. That tells you how pessimistic the consensus has become. If the number lands at 86.0, it would still sit above April's 6-year low of 84.50, but it would snap July's fragile recovery. The bigger risk is second-round effects. If energy costs stay elevated, companies will delay hiring and capital spending even if current output holds up. Solveen warns that the German economy may contract slightly in the second quarter after growth around the turn of 2025 into 2026. So the next Ifo print is less about August, and more about whether Germany slides back into stagnation. The lesson here is simple. Do not mistake one strong PMI for an all clear. The German economy is caught between two realities: hard data is resilient, but business sentiment is fragile, and sentiment tends to lead real activity over time. The Iran war, energy prices, and the Strait of Hormuz are the key variables. If the Ifo index falls as Commerzbank expects, it will confirm that Europe's largest economy is still at risk of a shallow downturn, even when factories are busy today. For investors and traders, this divergence between current output and future expectations is where the next move in the euro and German bond yields will come from. Watch the August Ifo release closely.